All right. Another uh, business startup deduction is something that we also want to take a look at. Now, when we talk about starting up a business, this is something that should be very relevant, not only if you are thinking about starting up a business, but if you're currently in the process right now, just understanding that you're able to take tax deductions for some of these startup costs. There are basically three areas that you really want to take a look at when we talk about startup costs. One is creating a trade or business. So this looks at market surveys, product analysis, all of the things that you are doing right now to sit back maybe and see, hey, is this business viable? Is this product viable? The costs that you're actually incurring, these are startup costs that potentially are tax deductible. Preparing for the business to open, any employee training, advertising, marketing type expenses that you come out of pocket, these again are business startup costs that are eligible for a tax deduction in the year that you're actually starting up your business. And in addition, any organizational costs, these are legal fees, state org fees that it actually took to implement the structure of your business, the cost of creating your LLC. These are also organization costs that are potentially tax deductions for you. Now, the IRS allows you to deduct $5,000 in startup costs and $5,000 in organizational costs, but that's only if your total startup costs are $50,000 or less. If your startup costs exceed $50,000, the amount of your allowable deduction will be reduced by that overage. So let's take a look at what we're talking about. Bill incurred startup costs of $53,000 in 2020 to start ABC LLC. Bill would have to subtract $3,000 from the $5,000 allowable deduction and would only be allowed to deduct the remaining $2,000. Why? Because Bill's startup costs exceeded the limit of $50,000. The deduction itself is $5,000, but since he exceeded the $50,000 limit, he's able to reduce the deduction by the $3,000 overage. So he would be allowed to deduct in that tax year $2,000 for business startup deductions. So if the startup costs were $56,000, Bill would not qualify for the deduction at all. So some of you might ask, okay, so what happens to those startup costs or the remaining amount, the $50,000 of those startup costs that we aren't able to deduct against our income in that year? That amount has to be amortized in equal installments over the next 15 years. So what do we mean about, what does amortization mean? Basically, it means you take $50,000, if that is the amount of startup costs that you have, you divide it by 15, and that's the amount that you are able to expense on an annual basis. If you don't want to do it annually, you take the 50,000 over 180 because that's the total number of months in 15 years, and you're able to take that expense on a monthly basis. All right. Now, it'd be best to claim the startup deduction for the tax year the business is officially open. However, let's just sit back and say that you opened a business last year, you filed your taxes in April 17th of this year. You can file an amended return within 6 months of the return's due date and include these business startup deduction if that's something that's relevant to you. And you can also amortize qualified startup and organizational costs as well. But again, this is one of those things that I would actually speak with your tax advisor before you decided to do that. And we're talking about amortizing not the $50,000, but we're talking about if you're eligible, let's just say for the $5,000 deduction. All right, this one is a big one, meals. A lot of small business owners like to take potential clients or customers out for meals. And one thing that we have seen is that in the past, you can only deduct 50% of the meal's actual cost, and that's if you actually kept those receipts for the meal. Now, 50% of the standard meal allowance, if you didn't keep your receipts, but you documented the time, the place, and the business purpose. However, this deduction has been amended to temporarily allow 100% meal deductions as long as the expenses for food or beverages provided by a restaurant. All right, now this is effective for expenses incurred after 12/31/2020, and this is going to expire at the end of 2022. Now, this was a piece of legislation that was kind of a deal that was brokered in regards to the Consolidated Appropriations Act of 2021. Some people call it the three martini lunch, but obviously this was something that was in the COVID relief package. And so therefore, that is why you're looking at the temporary status of this and its expiration at the end of 2022. So therefore, if you have meals in between this effective temporary date of base roughly 2021 to the end of 2022, and you are taking those business lunches and have those meals, you will be able to deduct 100% and not just the 50% that we've become accustomed to.